right, welcome everyone. This is our discussion number 54. I can't believe this club is not even a year old. We are already talking about number 54 here. But people like you keep me motivated, so I'll keep coming every week. Or maybe in some of these weeks, it's actually twice a week. So, so far so good. Today we're gonna talk about how to invest in commodities. I also gonna look at some of the data, some metrics, and we can draw our own conclusion based on which side of the market are we. Do we think it's really bubbly market? Is it approaching at those levels, or we still think there is a lot of steam still left in the market? Also look at some of the earnings, a quick summary on some of the companies and earnings, option trades. We're going to review that. We'll talk about a lot of stuff that has happened in crypto markets. um, Nowadays I think maybe I should only talk about market, uh, because crypto and the stock market are kind of now intertwined with each other. I think so. Maybe next time I'll just say let's give a market updates. We don't have to separate stock and crypto, and we'll also look at some option trades. All right, let's dive into it. Please understand, as always, this is only for our education. This is not a financial, tax, or investment advice. So take it as an education. Be more knowledgeable so that it helps you and also helps me in making decisions. Okay, so before we begin, want to wish everyone Happy New Year of the Ox 2021. Happy New Year, Chinese Lunar Year. If you're celebrating, welcome. I hope this year will be way, way, way better than what we had last year. It's almost we are reaching an anniversary of the worst pandemic of this century. Now the things will become better. I'm hopeful that as we move along, um, I'm looking at the bright side, and so it looks like markets are also looking at the bright side. So once again, Happy New Year to all of you. A quick summary for the week. Again, I don't think much has changed from what we had seen the last week. We still have the optimism around fiscal stimulus as well as the rollout of vaccine, which is providing tailwinds to stocks. One difference that at least noticed this week was the overall market, the bigger market S&P 500 was largely unchanged for the week. Uh, you know, 0.5% is not a big change. But we did see mid and small caps, they continue to go higher. And if we really look at the small caps, let me just bring up my screen. So this is S&P. If you look at S&P for over a week, this was what, 2.8. It started here, not too big of a change, 390 to 392. But if we compare it with the other indices, this is IWM, which is small and medium business, Russell, based on Russell 2000. That's up almost 17.5%. These are the gains that we generally see over the year, if we are very lucky. Yeah. But 17.5%, and we are what? Only 6 weeks into this year. So all the small and the medium segments have been ripping apart. One reason is because many companies in Russell are financials, energy, and those have been doing great for this year. The next one is tech, which is what, almost 9% up. S&P is 6.5%. And then we got a Dow Jones Industrial Average. Those basket of 30 stocks, that's up 4.25%. What hasn't performed till date in this year are bonds and the gold. By the way, gold was one of our, I would say, top performing asset class of 2020. If we look at from a start of the year to the end of year, gold was one of our top performing asset classes. Not so much in 2021, at least not just yet. Gold and bonds both have been down almost to the tune of 6 or 6.5%. But what amazes me is the resiliency of Russell 2000. Up, up, up. Hardly there was just one week where we saw some weakness in Russell 2000, and that was a weakness across all the sectors. Beyond that, even after that, end of Jan, in last 2 weeks, from 6% to 17%, like just in Feb, it's been up 10% so far. Amazing. What other things? A lot of earnings were reported this week. I think out of S&P 500, almost 112 companies, they reported earnings this week. So a lot to chew about. I was kind of a spoiled on which earnings to look at and which not to. So, but I'll discuss a few of them. Next, like energy stocks I talked about, it continues to outperform. And one of the big reason is that the crude oil prices also continues to rise. We are above $60 per barrel after a long, long time. One of the reason was the reserves of US. They actually came out lower than what they were expecting it to be, which was a tailwind behind a lot of energy stocks. Other thing that caught my eye was, and this happened only on Friday, VIX was actually below 20. That was really surprising. So let's go back and look at VIX. And that's only on Friday. It dipped below 20. So it has been above 20 for almost a year. Just on Friday, it closed a tad below 20, 19.97. Not a big from a big difference from statistics point of view, but from emotional point of view, it is. We can say it closed below 20. Last time when it had happened, that was on 21st of February 2020. That VIX was at below 20. And since then, it's been always above 20. Even 20 or 19 is a bit higher than the normal average, but these times are not normal times. So it looks like market knows no fear. No one is buying puts. No one wants to hedge their portfolio. Market always go up. So what's the point in spending money in hedging, right? So if no one is buying puts, so then the VIX won't go higher. And the result is markets are all-time high. If you look into any financial media, now it looks pretty boring. All you hear is all-time high. Russell all-time high, S&P all-time high, QQQ all-time high. If on a day when it is not all-time high, it looks like what's wrong with markets? Why it is not gone up today? But these are not the normal times. But we'll take what market gives. So markets were all-time high even on Friday. So I'm not predicting that this is going to be bubble or it's going to burst or it's going to be all doom and gloom in future. But we have to recognize that this is not how markets always stay, and it will not stay like that. Markets goes up on staircase, comes down in elevator. So, but when that elevator down button will be pressed, we don't know. So Am I selling everything and moving into cash? Oh hell no. Uh, that's not a winning strategy. Uh, imagine someone who had sold off everything in the March in 2020, waiting for it to go down further, and the markets never went down. I see Vijay saying it's euphoria, indeed, but it is driven by some of the factors which are difficult to ignore. Vijay. The times, the markets are also not the same. When Fed comes and say, "Hey, we got your back," then what's to fear about? Those were not the case earlier. When Treasury and the government is doling out and giving money, pumping money into people's bank account, and half of that money will find its way into stock market. That was not the case earlier. We all know the amount of money printing that has happened for COVID. That's more than the amount of money printing that has happened in all the past 5 big recessions combined together. Combined together. So much money is being printed. That money has to find its way somewhere. Uh, it's finding its way in the housing prices. Housing prices on an average are like up 16% for the year. It's finding in its way into stock market, into a companies that have zero products, that have zero revenue, but they are being valued at tens of billions of dollars. So this game will not continue for long, but as long as Fed is behind it, and I think there's still some steam left in this. So that's an overall things on your summary from my perspective. A quick look at the sector-wise performance. I think last week, again, energy continues to be one of the top performing sectors. We looked at it, it was up, I think it was 11.3% up week prior. Now it's 16% up. So 5% in a week. 5% in a week. Wow. Financials did good, up a little bit. And then I think technology also did good. Technology was up almost 2%. That's on the stock side. And the euphoria is not limited only to the stock side. It's coming back to the crypto. Before that, I see a comment, buy the dip. Yeah, I've been waiting for the dip. I haven't seen the dip just yet. I had posted on my Twitter account, I had posted the pie chart or a pizza chart of my portfolio, of my long stock holdings portfolio. And I'm I was at 17% cash, which is higher than usual, but because I also sell options, I want to have a little higher cushion. But still, 17% is too high because I'm also waiting for that crash that's not even coming to you know to buy the so-called to buy the dip. But I'm not selling everything and increasing my cash basket to 25%. For me, I think 17%, 15% is good enough. But if you look at a normal um, investing or philosophies, 17% is higher. But I want to keep some cash that gives me a lot more optionality that allows me to sleep well, especially when you're dealing in selling of options. It's good to have some cash buffer. Yeah, cash is a time horizon dependent, of course. And looking at you know where I am, I think 17% is higher. But if I'm approaching retirement, yes, I want to have more cash in my portfolio. But it's not just the stock market. Let's look at what's happened on the crypto market. Things could have changed in last 10 hours. So let me bring that up. What are we seeing latest? I think the top players are still the same, but I did notice that there has been a tussle between XRP and ADA for the fourth and the fifth spot. I think yesterday night, ADA or Cardano was higher than XRP in terms of total market cap. And now XRP has taken over Cardano. But the top two and top three, Bitcoin, Ethereum, Tether is a stable coin, so there's not much change that happens on Tether anyway. But the top two slots, still Bitcoin, Ethereum. One reason is a lot more institutional money is in these than as compared to other altcoins or other coins. So we're gonna talk a few more things around crypto, what happened later in the session, but not a big, no big change around Bitcoin or Ethereum. They are still trading in the same range. Okay, looking at some of the other stuff that caught my eyes, and this was a news in the market. Big news in the market is around chip shortage. So just to bring you up to speed, there are the whole chip industry, and we are talking about those semiconductor chips that goes into every product that we use. Be or is it your cell phone, so laptops, computers? You know, these are very evident examples. These are upfront. We know that there are chips in it, but what probably have taken a lot of people by surprise, including me, is auto industry. Tesla is, as someone would say, Tesla is not an auto company. It's a it's a it's a computer that happens to have a wheels underneath it. It's not a car. It's a computer that runs on top of wheels. Not just Tesla, even the traditional ICE engine cars have got a lot more electronics than it used to have earlier. And now all that industry is facing a shortage of chips. So the shortage is so severe that companies had to cut down on production of cars. So Volkswagen, they announced that they will stop the production of Audi in Europe, China, North America. Again, not completely, but they will reduce the number of Audis that they will be able to produce. They don't have the chips that goes in those cars. Ford, Honda, they also reduce the output of vehicles. So estimate is that this year there will be 700,000 fewer cars. And now that's also starting to impact labor market. Car companies have been furloughing tens of thousands of workers. GM, in their earnings announcement, came and already told that their bottom line will be impacted by 1.5 to 2 billion dollars in 2021 because of shortage of chips. Now, how did this shortage suddenly came about? So there are a few reasons, you know, if you look, try to dig deeper into this. It is difficult. It the time it takes to build a plant or to increase the capacity of chip manufacturing is huge. It's not that you can just retool your assembly line to start producing different chips. In 2020, because the car sales were not happening, no one was traveling, no one was driving, people were locked in. So all these auto companies had cut down on the orders that they would generally place on these chip making companies. On the other hand, laptop companies, computer chips, chips that goes into computers, the demand has gone through roof. So the chip manufacturing companies focused on increasing the capacity of the chips that goes into computers, goes into laptops, So they moved all their manufacturing capacity over there. And now suddenly auto industry is now facing a crunch of chips. It has become so important that German Chancellor Angela Merkel, she personally is getting involved in this. On Friday, there was a news that now it's got President Joe Biden's eyes and ears are now on this chip shortage because it's becoming just the fact that it's apart from impacting just an industry, it could become a strategically important for any country. So, and it's not just auto industry. I think even the um, equipments like microwaves, some of the other electrical and electronic equipment, they're all facing shortage. So chip shortage, any investing ideas I do have. So for example, there is there are a few ways to look at it. Number one, the consumers of chips. Now AMD, Nvidia, they do make chips, but they also consume a lot of chips. Intel, I think, just from the perspective that Intel had fallen down after their recent earnings announcement, and now with all the shortage, that makes Intel interesting. Also, Intel to me is now looking interesting because if it becomes a strategically important, then Intel is one company that will benefit. Other company that I'm looking at is TSM. TSM is a Taiwan semiconductor manufacturing. That's the biggest contract manufacturing company in the world. So all these chip, companies, AMD, Apple, they all go and get their chips from TSM. Now, that's why TSM still produces a lot of chips for Apple. Apple is not facing shortage of chips because Apple is a whatever 1.6 or almost $2 trillion company. GM is less than $100 billion. So if GM cries and asks for chips, TSM will produce for Apple and tell GM wait. There are others. So I'm looking at a picks and shovels play on chip industry rather than the companies that sell chips. So TSM is one play. Um, Applied Materials, because they sell the stuff which semiconductor producing or chip producing companies need. That's another play. Other one on my target, and I have some positions also in is ASML. That's ASML is I don't know what's full form. That's a Netherlands-based company. That's the only company in the world that produces extreme ultraviolet lithography machines, and those machines are needed for creating these new generation chips, 5 nanometer and 3 nanometer. And it is the only company in the world who have those machines. So they've got a pure monopoly on it. ASML. Then the other companies that could benefit from it is Lam Research, Cadence. Cadence produce and creates the software which allows you to design chips. Synopsys in comparison with Cadence. So these are some of the companies that I am focused on and will start building positions in these. Now, whether Intel will or whether it'll be AMD, whether it'll be Nvidia, I don't know. But all I know is from wherever these companies get their chips, all the chip manufacturers they will need some picks and shovels, and that's what I want to focus on. Okay, a lot of comments. Let's see. Any view on? Okay, so before that, good ETFs for crypto. So we have talked about some ETFs. I don't think there's an. Let me just bring that up. I just don't want to misstate anything. So there are some things on an ET on the crypto that you can invest. Is one is GBTC. This is the most popular uh, fund, which is GBTC. Grayscale Bitcoin Trust. Then there are others. I don't think there are other ETF because ETFs, a pure play Bitcoin ETF has not been approved in US. Um, but you can also invest in something which is proxy, which is BLOK, Riot, which is a mining, which invest in mining companies. Um, there is a MicroStrategy, which is now kind of a became the pseudo way for not just individual investors, but even the companies to get exposure to Bitcoin. So these are a few, I would say, vehicles if you want to get exposure to crypto. But most of them, they generally track and are tightly correlated with the movement of Bitcoin. Any view on Acronics soon to go through ACEV SPAC merger? Nope, I've not heard of this before. There are so many SPACs going along that we don't know which one to look at and which one to not. Let me take a note of this, and maybe we'll talk about it next week. Chip shortage, investing ideas, we just spoke about. Tesla, crypto BTC play. I wish, but I think Tesla has only done $1.5 billion out of their $800 billion market cap. So, but Tesla did put some wheels in motion for other companies to look at BTC as an treasury asset. So, because we're talking about BTC, let's look at the other big news is the BNY is the world's largest custodian bank. Generally, as a retail investors or banking consumers, we don't talk about BNY. But this is the world's largest custodian bank with some 41 trillions in its assets. $41 trillion. And on Thursday, they announced that they are moving into custodying even crypto assets, which is big news. So when I was thinking why they're doing it, it is because their customers, so BNY customers will be big institutions who use BNY Mellon services to custody the assets. So now those institutions, customers would be asking them, hey, can you buy Bitcoin for us? Now those institutions, they don't want to get into custodying Bitcoin. So they are looking for solutions who can help us in custodying it. Largest custody bank is BNY Mellon. Now they're thinking they are business enough that they should get into this. There are few companies that are already doing it. Fidelity is one of them. Fidelity Digital Asset Management. Gemini is another one. And then there are a few other companies that provide services for um, asset management on crypto. So, for example, MicroStrategy, Square, when these companies they buy Bitcoin, they are not holding Bitcoin. They are using services of some other companies who are then responsible for making sure that the Bitcoin is held securely. So now looks like BNY Mellon is getting into this because they don't want to be left behind. So maybe they'll start with Bitcoin and Ethereum and will diversify later. Other thing caught our eyes is Bumble IPO. We reviewed Bumble's pre-IPO. We reviewed its S1 when that came out, and looks like it went IPO on Thursday. It was priced at 43, and no surprises. It went up all the way to 84, and eventually closed on Friday at 75. So those who are proponents of SPAC would say, see, this IPO process is broken. The company left could have raised 80% more money than what they actually raised. The company sold shares at $43, whereas the market is saying that those shares were worth $75 as of Friday, just a, just a day after they went IPO. So from a company perspective, it's not a good IPO. They left a lot of money on the table. The money was made by the friends and the customers of investment bankers, not by Bumble, and definitely not by retail investors, because all the retail investors are actually buying it at 75.84. Only people who were able to buy this at 43 were the friends of investment bankers. So that's where we are seeing more and more SPAC coming in, saying IPO process is broken. It doesn't value the company fairly. The market is willing to put lot more higher valuation. So let's go through SPAC. But anyway, so Bumble is making another history. The 31-year-old founder's CEO became the youngest woman to ever take a company public. Well, that's amazing. She's just 31 year old, and now that company is valued at maybe $4 billion. So in Bumble, it's not just that she's the first woman. So Bumble is all about women. Women make the first move. Also, we find out that women are more willing to become a paying customer when they are using app as compared to men. So lot more power to women in Bumble. If you are in market for looking for dating apps, you got one more app which is now publicly is a public company, and let's see if it can provide a match to Match.com and to Tinder. I will still wait and watch. I think when we looked at its IPO, my conclusion was that I might buy a couple of shares just to keep it on my radar, but I want to see how the user growth continues, because the similar features what Bumble has, so Match.com is going to add onto their platform as well. And also, this is more popular and very successful in US. Outside US, Bumble haven't had that much amount of a success. So I just want to wait and see. So I'm not buying it at 75 right now. I'm not rushing to buy any stocks for this company. We'll have more time. Um, let's see. AMAT is about to declare results next week. Yep. Yep. AMAT has in fact had a good run over the last year. I know I was looking at it when it was around 40, and then now it's already $117. Just in last two days, I think it has good another notched up another 5%, 6% run in anticipation of the results coming up. Now, what could happen after the result is anybody's guess. We have seen companies beating revenue, beating expectations in terms of revenue, in terms of earnings, in terms of guidance. Stock will still fall 5%. So that's anybody's guess. But I want to focus on the trend, not just on this particular event, and then build our investment thesis based on what's the long term trend. Please add Indie Semiconductor. So Indie Semiconductor, is it already IPO or is it SPAC? Right? With these SPAC deals are very, very difficult to evaluate because you don't, as an investor, you don't have any information. Okay. So I'm generally skeptical of investing through SPAC, and we'll talk about it in terms of investing in SPAC after the deal is announced. PayPal, Visa, and now MasterCard. So MasterCard put up a big news around that they are now bringing crypto onto its network. Again, I won't go through all of them, but a quick highlights is MasterCard says that digital assets are becoming more and more important. When they are looking at the data in which in which the customers are using MasterCards to move USD onto exchanges and then buy it, they are looking at that the trend is unmistakable. A lot of people are actually buying onto crypto assets, and then they want to make sure that they're also become a part of it. So today, Mastercard have relationship with third parties who then convert, the USD to Bitcoin or the reverse way. So Mastercard could still serve as a payment method, but the core transactions, the settlement doesn't happen in Bitcoin on Mastercard network. Now, this news is important because now Mastercard says that we will work towards doing the settlement in Bitcoin itself. We don't have to convert Bitcoin to USD and back, which today Mastercard already allows. They work with the third parties who will do this conversion. But now Mastercard says they will actually do the settlement on crypto assets itself. They got their own criteria for which assets they will support. Let's say we want to make sure that consumers are protected. Any of those assets, they follow the compliance protocols, they follow the local laws and regulations, and then there is a demand and there's a stability in those assets. So that's their viewpoint. Again, many of these payment network companies are thinking how will they play when these crypto assets become commonplace, including CBDCs, central bank digital currencies. So MasterCard is kind of in the forefront. I think we talked about it's been a while now when MasterCard had actually did a pilot project. They're working with banks on how MasterCard systems can still be relevant when the federal banks and the central banks across the world will come up with their CBDCs. So they're already created a pilot project working with banks so the bank can simulate it. Also, they got a lot of building up their patent portfolio. So we'll have to see. But when PayPal and Visa have already got into, how can Mastercard be left behind? So one more big news is now out of our three big payment processing networks, we got a Visa, Mastercard, American Express. Okay, Discover is fourth. Now we got Visa and Mastercard already on crypto. Other chart, money printing. Now the the important point to note here is the amount of money printing. The Fed debt now exceeded 100% of our GDP, which hasn't happened. I think probably happened maybe 1940s during the World War or something, but it hasn't happened ever in the recent times. We could say that Japan is already in this position. Japan's federal banks, the debt of is I think 130% of their GDP. But this is a projected one, and it's coming from Congressional Budget Office that if we continue on the same path at which we have been over 2040, the amount of a debt that US will have will be close to 140% of our GDP. So imagine every new kid being born in US is already have to pay the debt. So we got a kids who are already are indebted to someone while when they are born. Not a good situation to be in. Someone and sometime we will have to pay. Probably maybe my generation will skim through it, but somewhere someone needs to pay up. Some things around Tesla. So one big thing was Tesla bought Bitcoins. After Mr. Musk kept pumping Dogecoin and this coin and that coin, silently he went and bought a Bitcoin. Whereas, and this is where it kind of a, I would say a little bit of a, I hate for these celebrities who kind of having fun with those gullible followers who don't know what they're doing. They just follow blindly. The people's crypto, Doge, and the doggy picture and all that. And then he goes and buy Bitcoin. So I don't know if Tesla really has any plans for Dogecoin. Are they going to invest some money in making it a real currency? Nobody knows. But the history, if you go back to history, Dogecoin was created in a 3 hours just as a joke. But people are still buying into that joke. Oh, it's amazing. You know, this impact and influence of social media. You know, it's so much that people just throw the reason out of window and just will follow blindly. So this came on, I think it was Monday, when Tesla announced they are buying $1.5 billion of Bitcoin, and this is for their treasury, corporate treasury. Bitcoin jumped 15%. And then since then, it's been hovering around the same point, price point 47, 48, 46. So if you look at a Tesla's balance sheet, the $1.5 billion is almost 15% of their net cash. So it is a little brave move, I would say. But then it's only $1.5 billion for a Tesla, which is $700 billion company. But I would say more than the fact that Tesla's bought it, this will set wheels in motion around question, which I'm sure now many of the companies' CEOs would be asking their CFO, what's our Bitcoin strategy? Or CFO should be telling their CEO what they want to do if they want to perform their job well. And the answer very much could be we have nothing to do with it. Even that is acceptable answer. But I think this question will be raised and should be raised in a corporate boardrooms on what's our answer for Bitcoin. It could be yes, we want to have it. No, we have nothing to do with. Or you could go to in middle of this. MicroStrategy went all in. Not only they invested 100% of their treasury corporate reserves in Bitcoin. MicroStrategy even took loan, even took $650 million of debt to invest in Bitcoin. So that is completely one extreme. The completely other extreme could be I will have nothing to do with it. Warren Buffett, this is a rat poison. Or 2017 JP Morgan, it is a fraud. JP Morgan has changed their views, and Diamond has come back and said, I regret saying making that statement. So that could be another extreme. Or it could be in between. Square invested only 1%. They made what, $50 million, just 1% of their treasury reserves. But I think it is important that this question will be asked, and CEOs and the CFOs will have to have an answer for their board in terms of what they want to do. I see SEC sued Musk for tweeting taking Tesla private. Same could happen for Doge tweet. It could be a little different in terms of Doge tweet or not because many of these things, I mean, the regulations are not entirely clear on what you can do with these cryptos or not. And anyway, Musk is known to hate SEC. So he'll find these ways to play with regulators. Also, if it says long Tesla, but hated how Elon kept talking about Doge. Yep, yeah. I think, and I think somebody pinged me. I said he is just joking, but how would followers know? None of the followers will actually go and look at what the Dogecoin is. So I went to the Dogecoin project and looked at the last code that was written for Dogecoin was 15 months ago, and that code was also probably changed or some small text. I am not willing to invest in any software project where there is no coding happening. Why would I? Who does that? I mean, it's all there. You can go to GitHub and look at Dogecoin and see when was the last check-in happened. Let me just bring that up. In case if you are, maybe if someone are asking you, should we invest in this coin, to find out if there's some real work happening on that or not. Say if I look at Cardano, I look at the where's their source code. So the changes are happening today. This work happening. There's a code checked in 17 minutes ago, 32 minutes ago. People are working on this. Let's go and look at the favorite Dogecoin. You go to its source code. Last check-in happened on November 3rd, 2019. November 3rd, 2019. Nothing has changed after that. 16 months ago, there was a one change that happened. And if you are a little more geeky, you can delve deeper to figure out what change has happened. It may be a very small change. But the fact is, no one is working on this. Whereas in the whole crypto market, there are developments that have happened of immense magnitude. That is why now a lot more institution investors coming in, because there's a lot of development has happened. There's a lot of work around security, around ensuring that, how do you track everything, around the scalability has happened across all these big coins. Ethereum, Bitcoin, Dogecoin is a created as a joke, is still lying there as a joke, and people are investing in it. It's a greater fool's theory, uh, which is running here. I'll buy it because there is someone else who is more foolish than me who will buy it from me. So be careful. So first, sometimes I use this to figure out if someone tells me, how about this coin? I go and look at, how big is the community? How many developers are working on it? In Dogecoin, there's hardly one or two. When was the last code check-in? What's the adoption? This is nothing. How would company board justify not doing buybacks instead of buying crypto with surplus cash? I mean, that's a company's decision in terms of where they think they could get more value for their shareholders. If you're buying back your stock, maybe a stock is already too high. And if you go back and look at the buyback stories, majority of the buybacks haven't been good for shareholders in long term, because at the end of the day, there are people who are making these decisions in the boardroom, and sometimes they get too bullish and about their own company, that they ignore the fact that company could be actually overvalued when they actually buy back the shares. So would you buy back? Do you think that will increase the company's value, or do you want to get an asset which will then increase the overall enterprise value of your company? That's a decision that we have to make. Again, I'm not saying that every company will go into this, but I think this is a question which is now being asked. So variability in earnings, gap income cause of BTC volatility may cause more harm to Tesla. So there will be a volatility in BTC, no doubt about it. But I think if you really look at a BTC and plot this volatility, probably will be less than what the Tesla volatility, shares volatility may be. Again, I don't have the numbers to talk about it. But the fact that MicroStrategy has probably gone all in, and maybe they picked up the right price point. When he bought it, it was $10,000. Now, even if it goes down, 20%, Michael Saylor will still be okay with it. Number two, from the gap perspective, this is always very conservative from a gap perspective. Again, I'm not an accountant, but based on what I have heard and what I've read, the gap accounting says that if you're holding Bitcoin on your balance sheet, for when you're reporting it for a quarter, you have to pick up the lowest value of that quarter as the value of your asset. So again, Tesla's very small positions, I don't think is going to make any material impact on Tesla. Tesla share price will not move based on how Bitcoin does. MicroStrategy, for sure, that is a proxy for this. Yeah, MSTR did not have anything. So when I looked at the decision, I went and looked at what's the MicroStrategy's business is and how that's been performing. And my concern was it's okay for them to do this because their normal business of software actually declined in 2020, whereas the rest of the software companies, SaaS companies, were going through the roof. So then I'm like, yeah, if your software business is not working in the best of an environment, what else you do? So he took a bet, and Michael Saylor has I think the maximum number of shares. So he kind of runs the board, or I would not be too far off if I would say he is the board of MicroStrategy. He is the only CEO who has seen any company shares gone down, lose 90% in value, and still the CEO. Anyway, so I was a little skeptical. I'm like, okay, this guy is doing it because the normal business is not doing, is nothing to lose. But I think I came around to the fact that in the end of the day, it turned out to be a smart move. So I was a little cynic about MicroStrategy, but I want to give a credit to Michael Saylor for taking that bold decision. See a question: which platform are recommended for crypto buying? The easiest one and the most commonly used in US is Coinbase. So there are two or three, and I would say stick to regulated exchanges which are regulated in US. Oh, so thank you, Vijay. I didn't see that. So he already had mentioned Coinbase, Kraken, and the third one I add is Gemini. These are the three exchanges regulated in US. Let's continue. The other thing on Tesla, vehicle recalls. So National Highway Traffic Safety Administration, they asked Tesla to recall 158,000 vehicles, which is 10% of the vehicles, overall vehicles, number of vehicles ever created by Tesla. 10% of those have to be recalled because the big iPad that they have in a Tesla, their media control unit, that's got some glitches in it. And when everything is controlled by a computer, everything is controlled by the oversized iPad. And if that iPad doesn't work, you're completely out of luck. So I think many of the users, the owners of Tesla have reported that their heating doesn't work. They are not able to, some of those signals don't work on the control unit. And there are some software or hardware issues, and then they recommended Tesla to recall those vehicles. And the final, I think, yeah, that's the final thing around Tesla is this chart caught my eye. Tesla dominates the worldwide electric vehicle market, but with about 18% of sales. But in Europe, the dominance is actually going down. So if you really look at Tesla was a dominant player, but the moment some of the other players started to catch up, so this is now right now the most dominant player, EV player in Europe is Volkswagen. It's not Tesla. Second is a Renault, Nissan, and Mitsubishi consortium. Third one is Tesla, and now Tesla is already being challenged by Hyundai and Kia. Now this narrative we don't see much being talked about when looking at Tesla valuation, because Tesla is the largest, most selling electric car in the world. But wherever the regions, wherever uh, the competition has started to go up, Tesla has slowly started to lose grounds. We are now seeing it in China as well. Tesla is still the biggest and the dominant player in US, no doubt about it. But I do see competition heating up in US, not from the local uh, auto manufacturers like GM and the Ford, but these companies, other companies coming to US. So time will tell how Tesla will be able to compete and how strongly will it be able to compete. But I think right now all the valuation is baked in saying Tesla will stay as the most dominant player throughout the world in EV market. So that is why I'm a little bit hesitant on Tesla's current valuation, because I don't know if we are putting, you know, credence to all these other things that are happening across the world. NIO is giving a good challenge to Tesla in China. Tastyworks has it too. I saw it the other day. Yes, Tastyworks have started supporting crypto, and right now they are actually having an offer. They'll give $50 cash if you try crypto over there. The reason I don't use Tastyworks is I don't think they'll allow you to move your coins or your assets, private key, outside of Tastyworks. Again, Tastyworks is not doing themselves. They are just a front end, and the back end is all done by I forgot the name. I was actually in one of, I think it was 2 months ago. I was in a call with Tom Sosnoff, who is the CEO of Tastyworks, and I actually asked him this question of are you doing, who is doing it, and what coins, and how are you going to do the custody. So he made it very clear that they are not into business of crypto and the custody of crypto. They are working with another company, Z, not something cash, I forgot, and they will be doing all the custody. So you can do it on Tastyworks as well, but then you cannot move your coins out from that. Tesla can repair them remotely, reprogram. I wish I might have to do something if they have to change the chip itself. Can do it remotely. Yeah, Lucid is coming up. There's been a lot of, I would say, unsubstantiated news around merger of Lucid with Capital CCIV SPAC. We had to see, but apart from Lucid, there's a Fisker who is also coming up. There's a Rivian. So there are many EV companies. So VW numbers are a bit contested. Recent news: VW asked dealers to buy cars to reduce EV fines end of 2020. Or maybe I didn't read about this, but maybe possible, may not be possible. This is a very, I mean, this is a general tactic. It's called shoving or pushing it through the dealer channel. Nothing new. GMs and GMs of the world have done it for years. If anyone is an auto dealer, probably would know more about this, but I've heard about this practice is pretty common. Kia tie up with Apple. Actually, Kia shares jumped when someone had reported, a news outlet had reported that Apple is tying up with Kia for their car manufacturers. And if you are working with Apple, or if you have dealt with Apple as a vendor, you know that Apple doesn't like to talk about what they're doing. Even when I was working as a vendor to Apple, and my company was working as a vendor to Apple, and when I'm talking to my other customers, I could have never, I was not allowed to say that we are doing this for Apple. So Apple came back and told that no, we have nothing to do with it. We are not working with Kia. And then Kia had to retrace their statement saying, oh, there is no discussions happening with Apple. Now, there might be discussions happening, but if you are dealing with Apple, any announcement that you make, any information that needs to go out, have to be signed off by Apple. Apple wants to control not just the software, but even the information flow about the projects that they're working on. I think probably someone in Kia would have talked about it without understanding that now they're dealing with Apple, who is, and Apple is very, very secretive. They want to control everything around any project that they are doing. Kia shares fell down another 15-20% back to where it was. But Apple will work with someone. I don't think Apple is going to go Tesla way in creating the car from scratch by themselves. Who knows? I mean, we all buy iPhones. It's the best selling phone in the world. Apple doesn't produce it. It's being done by Foxconn. So Apple will find out, will tie with some car manufacturer. Is it going to be Kia? Probably, but they're very secretive. They are not going to talk about it. Yeah, what are thoughts on LTC? LTCs again, I don't think LTC's only use case is if crypto assets become the medium of exchange as a currency. So today, Bitcoin's use case is store of value. None of these companies are buying Bitcoin so that they can use it for their common, to pay their vendors or other stuff. They all are buying it as a store of value. Now, LTC was created so that it is faster than the Bitcoin blockchain. It means only if you are using these crypto assets to buy and sell the stuff, you want the transaction to settle while you are at a customer's, while you're at the storefront, at the checkout counter. You don't want to wait for 30 minutes for it to settle. You want it to be done in a few seconds, like it happens on the credit cards. So LTC was created for that. But I don't know when that use case will actually play in, when we can start using this as a currency, especially not in US unless the IRS changes its rules. So I'm not too bullish on Litecoin from that perspective. And meanwhile, who knows, Bitcoin blockchain itself could become way faster than it used to be in 2017. There's already one upgrade planned for this year. Or zero hash is handling digital. Yeah, zero hash. Or something Zcash or yeah, it's a zero hash who's doing that. So what Tasty has provided, they provided a front end for zero hash. So everything on the back side is being done by zero hash. So Tasty probably will get some commissions, etc. from there. All right. Magna Symbols MG is a business to build small batch of other EV company. Baron article. So I am bullish on Magna. I think it's Magna Auto. Again, Magna is a company which is not very household name, but they are they started as a big supplier of lot of auto components, but now they become a contract manufacturer, just like TSM is on the semiconductor industry. Magna has become a contract manufacturer in auto industry. Is Apple tying up with Magna? Who knows? But there are many these EV companies, especially the smaller ones, who instead of setting up their own factory, which will involve a lot of capital investment, they'll rather outsource it over to Magna to build a car. So Magna is, yeah, I'm bullish on Magna. And if you want to play, again, this is the similar play like semiconductor. I don't know which EV will succeed, but if most of these EV companies are using some outside contract manufacturer to build the cars, Magna will anyway get their money. Whether that company succeeds or their competitors, if Magna is producing it for more than one uh, car companies, your risk is diversified in case of Magna. All right, quickly, something else caught my eye was around the Netflix. So, question, as per Reed Hastings, the CEO and the chairman of the board, who is Netflix's biggest competitor? My first reaction to this was, of course, it's Disney. But let's see what different answers we can get. I see Asif says Robin Hood. That's interesting. People are so. I think the theory behind this is people are at home instead of watching Netflix. They get a lot of their adrenaline rush by trading on Robinhood. I see Roku, Amazon. Okay, uh, none of these. So let's read through some of these few lines. Not Disney. So this is most clearly understood as the idea that everyone is competing for finite attention. So this is an attention economy. Netflix is competing for our attention. So is Disney. And now there are more applications for this attention ever before. The real challenge for the Hollywood is that for decades, whenever leisure won over work, TV was a primary beneficiary. You know, you go out for work, come back after a hard days of work, switch on the TV, and you watch TV. Then slowly, we moved on from TV. We moved to streaming. We got Netflix. We got Disney. Now we got Fubo. Is saying, okay, instead of a TV, I will move to watching the streaming. So right now, the question is what to watch. Do I want to watch a Disney or do I want to watch something on Netflix? What Netflix is projecting that it used to be what to watch and now it is whether to watch. The Len, you got it right. Now the question which consumer is asking themselves is, should I watch TV or a better version of TV which is streaming, or should I not? Now the competition is not what to watch in TV. Is it Mandalorian or is it Queen Gambits? The question is, should I even watch TV or should I go and play a game? So now Netflix is thinking that this is an answer that they need to be ready with. And today, Hollywood doesn't have a good solution. Neither Netflix has a solution for how to answer the question whether to watch. So when it becomes a whether to watch, then it's a threat for not just Netflix, a threat for Disney, threat for HBO, it says for everything else. So, like we talked earlier, I'm bullish on gaming. This will become the next way to socialize, especially for the next generation. I don't think I'll ever get myself around, watching a birthday party for or over in the gaming environment. But I'm sure next generation would be. And already nowadays there are concerts that are happening on gaming platform in the games. It's happening on Twitch. So this is one problem. This is a problem for Netflix, but as an investor, for us, it's a great way to figure out what's going to be the next big social um, next big platform where people will socialize. It's going to be a gaming platform. Game has evolved way beyond individuals playing game to watching others play game to getting passively involved in game to getting actively actually controlling the outcome of the game. Nowadays games are being created which are in which the what will happen in the game is not defined yet. The actions of the people in the game, they will actually define the rules of the game. So today, neither Netflix nor Hollywood has a good solution. But we are seeing a lot of companies and a lot of acquisitions in the gaming industry. This week, I noticed Electronic Arts actually bought Glue Mobile. I didn't like it because I was shareholder of Glue Mobile, and I thought they will do much better if they would have been a standalone. But probably Electronics Arts saw more value than I had seen in Glue Mobile, and they bought it over. So it was up 36% on this news. So Glue stockholder will receive $12.50 in cash. So now that becomes part of Electronic Arts. So there are a few players in the gaming on which I'm already interested in. Glue Mobile was one of them. So now that's out. I'll have to figure out some other things. Some of the tickers, if you're interested on the gaming, Unity. We had done a review of Unity a while ago. Amazon got a Twitch, and right now the valuation Amazon, Twitch doesn't have a big contribution. That is why even if Amazon is at whatever 3,300, I think it has still a lot more to go. They haven't yet used Twitch to its potential. Twitch can become way, way bigger than what it currently is. Microsoft, their whole gaming platform, is another one. What else? I'm just looking at a post-it. Sorry. I got Glue is out, Activision, Electronic Arts, Huya, Huya, and Zynga and Tencent. So these are some of the takers that I have a deal with on the gaming side. Or do you watch others play Twitch? Yeah, next thing will be online gambling for games. Yes. Yeah, Take Two. Yeah, Take Two. I never got into it, and kind of I haven't, and then I haven't looked into this. But Take Two again is a great company from a gaming perspective. So again, we don't have to pick one over other. Maybe buy and spread your bets across multiple gaming platforms. Anti-Doi, which is a Nintendo, I had a position in it, but then I made money and I kind of sold it because again there is no options on Anti-Doi. Similarly, there are no options on Tencent, so I have a small position in Tencent because only thing we can have in Tencent is the shares. Similar was the case on which is Nintendo Anti-Doi. But yeah, I mean, pick up some of these games and see which shares, which companies, how much you want to invest in. But this is the one big a trend, and I want to follow on the trend rather than daily price action. So this is one trend which will I'm bullish on is the gaming trend. Is there an ETF? Maybe. I haven't looked at it. Let me take a note of if there is a gaming ETF. SE has gains, but I think a lot more SE stuff is also coming from their e-commerce. So uh, they are more around the e-commerce than games. Even that case, you also have a Jumia who is doing e-commerce, and now they also bought a company which will allow games. So they are following the same playbook as SE. Blocks, they are not um live yet. And I think yesterday I read that the Roblox have actually moved out their IPO. They were supposed to go IPO in Jan, Feb. Now what I read is they are pushed it out over to March. But if blocks come on, yes, I will be very much interested in Roblox. We had done a deep dive around Roblox and the good tailwinds that we see behind it. Again, Roblox, Unity are the platforms for building games. So I mean, Unity has got a lot more other use cases. I'm more bullish on Unity than Roblox, but Roblox is also good. I'm waiting for it to be IPO. Now, whether I'll buy it on IPO when it is popped up 50, 80%, Probably not. That's not my style, but this is something which I will always keep on my radar. Roblox. All right, quickly. What else? Reddit Army away from GameStop, now high on pot stocks. So we saw Reddit Army getting behind a lot of these pot stocks, and many media channels, or suddenly were just talking about cannabis stocks. So we saw Tilray from $20 all the way to $67. We saw Aurora Cannabis $12 to $20. MJ, which is ETF, around $20 all the way to $35. Afria, 15 to almost double, $32, little more than double. But as always happen with these euphoria and with these, I would say, new form of pump and dump, this reminds me of those, in movies I've seen those boiler rooms wherein traders will just call up and push up the prices of shares. Now those, instead of those rooms, now we have forums, online forums. All they came crashing down. And now I pity for the folks who bought it at 60s, till who bought Tilray at 60 or Aurora at 15, 16. But these things, they don't end good. We're seeing it on a GameStop. Now it's what, 50, 52? I don't know. It's definitely below 60, from all the way to 483. Is now at what, 52.4. So there's no need for us to feel FOMO, to give in to euphoria. Euphoria never ends well. And it's too difficult to time it. I mean, I don't like playing this game. So it's a good sport to watch. Watch it from the sidelines. I don't want to be detached, but I don't have to be active player in that. Watch it from sidelines. And now what, based on what's happened on GameStop, and this is what I was afraid of. At least there are few interviews I'd seen on the TV, wherein the people now who got burnt because of GameStop saying stock market is rigged. It's not for individual investors. I'm cashing out. I will never invest in stocks. So it doesn't end well. Oh, ESPO is gaming ETF. I was following but never got it. Okay, ESPO. I'll take a note of it. Other chart that caught my eye was a wealth gap, and this is a much bigger societal problem. Is the top 1% in last 2 decades or 3 decades, now they are owning more and more of the wealth, and as compared to the next 9%, 40%, bottom 50% hardly have anything. So more than 50% of the wealth is now held by top 1%. And in 2020, because of pandemic, 2,200 billionaires saw their net worth grew by $2 trillion, while 435 million, the people, they lost ground. And this should be surprise. Only thing that was working, at least in US in 2020, was the stock market or the real estate. Who invest in these are the people who are already rich, who are already having these assets on their balance sheet. Real economy still way below than where it was pre-pandemic, and the stock market is way above than where it was pre-pandemic. These are, but this is how the market is. Does that mean, is there a sign of froth? Are we thinking that now it is becoming more and more frothy? Is what we're going to talk about next. Yeah, from the foundation of one of the richest person at the time. True. I mean, That's what do we can say the same thing about Bill Gates. If his foundation comes up with something that for a change, in to bring a change, also you need money. So I'm not surprised to see that these are coming from all these billionaires. They'll then go and start some foundations to make a change in the world. I mean, I can sit at my home and talk all I want to talk about how to change the world, but I don't have money to put behind it. Nothing's gonna happen. Nothing gonna happen. I can come up with the great ideas, but the ideas don't run. It's the money that will run it. So whether you like it or you hate billionaires, I think it's good to maybe have them invest their money wisely. Bill Gates have done it. I think Rockefeller at least has also done it. And then there are some billionaires who will never do it. That's fine. So why is stock market so high? Is it a sign of fraud? Again, I'm just going to present some data. I'll leave it up to you on in terms of how you want to interpret it. 50 companies with less than $1 million in revenue and a market value of more than $1 billion. And a year ago, there were only 22 companies, 2 years ago. So now we got 50 companies with less than $1 million revenue and more than $1 billion in market cap. 90 firms are trading for more than 50 times the sales, trailing 12-month sales. 90 companies. In 1999, at the height of dot-com boom, the number was 16. Okay, you can put up we can always justify it based on where the interest rates are. They're zero, they were not zero. Fed is backstopping. Again, we'll have our own, depending on which side of where you lie on the spectrum of complete pessimism towards stock market to the highest optimistic. We can all find a reasons to justify what we are seeing today. Okay. But these are just the numbers. These figures don't include the companies that don't have any sales. I don't think in 1999, this would have been a big problem. So we have a company like QuantumScape has zero sales. Nikola, I think they have some $30,000 sales or something like that. They installed some solar panels on house of a founder. 20 most highly valued US companies with revenue less than $1 million. QuantumScape, not even $1 million of a revenue. Arrival, Virgin Galactic, Nikola, KOD. You can read through it. Fisker, Canoe, Lordstown. One common thread among all of them, which across most of the companies, is SPAC. Most of these companies have gone IPO through SPAC. QuantumScape, Arrival, Virgin Galactic was Chamath SPAC. Nikola was Vecto IQ. I'm not sure about these. Fisker is again we're talking GeoEV SPAC, Lordstown Motor. All have gone through SPAC. Normal, if they have come through normal IPO, probably they may not would have been able to raise any money. So they went through SPAC. So that brings me to the next point, which is if the stock market is bubble, then is SPAC a bubble within a bubble? So here's some another data point. SPAC raised $700 million in January of 2020. Like 12 months ago, 13 months ago. In 2021, they did $25.6 billion. It's like 36 times. What has changed in the world? That suddenly are we changing the world hunger problem? All these companies have suddenly become so valuable. Like 36 times more money raised. as compared to Jan 2020. And it doesn't show any signs of slowing down. People are ready to put in money behind these SPACs. IPOs in certain are experiencing bubble-like run-ups on the first day of trading. The SPAC comes IPO, it doubles. Again, you've got to be really careful if you're investing in SPAC because so much money is being pumped into it. There are a lot of dollars that are chasing deals. Again, the number of companies. Now there are one company which is probably being chased by multiple SPACs. So that means the standards will slip. If you want to now I'll probably go back to what we discussed during the SPAC analysis. If I am a manager of a SPAC, I'm a sponsor of a SPAC, I get paid bonanza if I actually get my SPAC merged into another company. I take a company IPO through my SPAC. And now if there's a lot of a competition for a company, then obviously I'll relax my rules on saying, hey, you want to come and partner with me? Okay, I'll not look at your balance sheet. I'll not look at these other stuff. I'll ignore it. Because if I don't marry with you, I don't get paid. So the standards will slip. And the recent one, at least I looked at it, was Clover Health. And there was a short report on Clover Health. I've never invested in Clover Health. I never looked at that business. I know some of you were. You put me on chat saying, hey, how do you think about it? I said, I've not invested in. But after there was a short report, I went and looked at her Clover Health and then went back and looked at what Chamath has to do and all that. And I also looked at what Chamath's response was to that short report and what the Clover Health's response was. To me, it looks like Chamath probably just closed his eyes when he got Clover Health to IPO. And I mean, if I were in his place, I'll do the same thing. I mean, if I were to invest $25,000 and I can make $290 million, hell, I'll close my eyes. I'll close my eye. I close my ears. I close everything. I'll to bring a company to IPO. So be really careful. If you are investing in these SPACs at the height when they are trying to get a company public, because after that, it will depend on the company's performance. And eventually, company going public will struggle to match the value of cash injected in them. There's so much money being dumped into them. Bottom line. Now the celebrity connections. And this, I think last week there was a news around Colin Kaepernick. He's also coming up with a SPAC. So now we got Shaquille O'Neal SPAC. We got Colin Kaepernick SPAC. There's a lot of these celebrities are now coming up with SPAC. There's already an IPO madness which is happening around. This is making the market more enticing to investors than they have been ever before, and especially to retail investors like you and I. So these companies which are coming to SPAC, they'll all be making money. So it will be profitable for the sponsors. Right? Chamath made $290 million on Clover. Clover, when they came out, they got what, $4 billion on their balance sheet now to build the company. But if you and I, we go ahead and buy, and again, I'm taking a Clover as an example. I'm not saying that this is fraud or whatever. But if you and I now we buy into these companies at these valuations, we got to be really careful. And also on top of it, we also know that these early investors and the pipe investors got a lot of warrants at much lower price point than what we are buying these shares for. So those warrants is going to dilute and the share price is going to come down. So to me, that's why I'm little hesitant or very careful in talking about investing in SPACs because we really got to do our homework very, very carefully in terms of when we're trying to evaluate a SPAC. Just this looks like a dot-com era. Yeah, to especially the SPAC side, that looks to me like a dot-com era. I'm not talking about the general market, but the SPAC to me for definitely looks like this is not going to end well. A QS is upgraded by Morgan Stanley this week, so it's going to have a new bull run. Yeah, I think Morgan Stanley upgraded the many other players in EV. QS is one of them. I think Fisker was another one uh, in terms of getting upgrade from Morgan Stanley. I think in QS may have the great technology. I'm not debating that. Javdik Singh, he's a great technologist, but there's a huge difference between getting a prototype working and moving to a production and supporting it. So I think that's the gap that company needs to fill in. And finally, they're not the only one in solid state battery. Toyota has got. There are a few other companies we talked about earlier. They also have a solid state batteries. So yeah, be careful if you're on SPACs. SPCX is actually managed SPAC ETF without dealing with the individual SPAC risk or dealing with time with profit taking. Okay. Yeah, there are. So now we got a SPAC ETF, SPCX. I'm saying, Kunal, you can create opt-in SPAC, make your money 100x in 1 year. Uh, we'll do it some other time on the SPAC. But be careful if you're investing in SPAC. I'm not saying all the SPACs are bad, but if you look at that's what was bullish on Pershing Square Thornton Holding because they do not have that 20% kickback to promoter or to the manager of the SPAC. So when Bill Ackman created the SPAC, he says, I don't want to give the 20% to the promoter, which is what Chamath is getting, which is what many of the SPAC managers, they get 20% of the final valuation as a reward. So that's why I'm a little more, I would say, if I were to, yeah, Pershing Square Taunton Holding, that's why I actually took a position in it. Because now I know that 20% kickback is not there in that one. This I looked at from a Robinhood, their engineering blog. In the no surprise, the equity and the options volume and Robinhood is through the roof in Jan. And I think all these are the GameStop, AMC, what else? Nowadays the Tilray and all the pot stocks. Look at the amount of a volume. It's been surging um, on Robinhood. Percent of IPOs with negative EPS means companies coming to IPO and not making any money and losing money. I mean, now it's even hard to imagine that company coming to IPO and they have actually earnings. Oh, that's great. We don't even expect companies to have any earnings. But if we now go back and look at, expand our time horizon, it was in 2000s when we have a lot of companies going IPO and having not making any money, non-profitable companies. Now we got almost a similar percent. 80% of the companies that have been IPO have zero earnings or negative earnings. They are loss-making companies. Percent of stocks beating the S&P over trailing 12 months. 72, 2000, 2020. the individual stocks which are beating S&P 500. Corporate insiders are more bearish than they have ever been. Now let's look at that chart. If you are interested uh, to go through the article, let me just put this article over here. Yeah, I see Ajay saying if they make money, investor calculate PE. Correct. Let's take the metric out of it. Now there is no earnings, you can't even calculate PE. Now then we start talking about calculate price to sales ratio. That's why in most of the companies now we are saying PE is not even a metric to be looked at because there are no earnings. How can you even calculate PE? So we started calculating price to sales ratio or price to 12 months trailing sales. Now I'm seeing that even that metric is being changed in favor of companies like Snowflake to justify the valuation that Snowflake has. Because now we are talking about especially in the SaaS companies. They said now we should not look at price to sales, we should look at price to remaining performance obligation RPOs instead of looking at sales. So we can change the metric the way we want to. But this is, this is too crazy. Yeah, this is you're saying forward 12 months sales. Now in a SaaS, sales doesn't matter. I'm hearing a new metric, which is what's the point of looking at sales? Because your sales, you can't recognize that as a revenue. You'll only recognize it based on a consumption. So we should look at an RPO. But the fact that insiders have really been as bearish as they are now. Now the firms for which the net insider buying is positive, like 10%. Only 10% of the firms where the insider buy is positive. Over in 2021. Overall, it's used to stay around 25%. That when the insiders will go and buy the company shares. 10%, never seen that before. It's 2 standard deviation with below me, very far away. Let's see, cloud judgment substrate. Okay, cool. I'll take a note of it. This guy wrote a nice blog for SaaS company valuation. Cool, thank you, Kunal. Now, last one, Stanley Druckenmiller. He was in a call with Goldman Sachs. And that's what he had to say. He says, buckle up, Tony, I've been doing this as some kind of a chief investment officer since 1978. It's a long time. And this is about the wildest cocktail I've ever seen in terms of trying to figure out a roadmap. Okay, we can dismiss Stanley Druckenmiller saying baby boomer, old economy, and doesn't understand the new age companies. It's like Warren Buffett, whose time probably has passed. We're talking about new fund managers, but we can't ignore the numbers. So Stanley Druckenmiller, he hasn't recorded a negative calendar year, no down years in 40 years. So I don't care how great these new fund managers are. And frankly, I've never been following Stanley Druckenmiller, but I went and looked I've heard his name a lot in a respectable way, but then I'm like, maybe he's an old economy guy. But when I'm looking at these statistics, that caused me to think, no negative calendar year return in 40 years. That's impressive. That's a hard number. You can't debate. So the tech has been there for last 10, 15 years. So he's been through that. But he haven't had any negative calendar year return. So then he must be knowing what he's talking about. So anyway, his short-term play is short, long-dated US treasuries. He says, for the current environment, this is his play. And then I leave up to you if you want to follow his play, want to create your own play, but it never harms to look at what some of these successful people are doing and create our own thesis around it. Long commodities. Says because the Fed could drive me crazy, I also have a large portion in commodities and short US dollar. So short long dated treasuries, short US dollar, long on commodities. So that's brought me to look at commodities. Let me take a few 30 seconds break, give rest to my throat, look at some questions if you have before we jump into commodities. Oh, let me open up this blog, Cloud Judgment. I've heard this name, Jamin Val. This name sounds familiar to me. I'll have to go back and look. How did this name came from? Okay, so let's talk about if you maybe I've seen him more on Twitter or something. So okay, Steve said, what's a SaaS company? Sorry, I should have clarified that. So Steve, when you're talking about SaaS, this is software as a service. So traditionally, software has been sold as a license. We used to buy Microsoft Office license. We used to buy Windows as a license. So many of these software companies used to sell as a license. Now they have moved from selling it as a license for the product to a service. You pay for what you use. Instead of charging you one time $200 for Microsoft Office, I'll charge you as a service $50, $60 per year. And from a company perspective, this is the holy grail because now you got a consistent predictability in your revenue. And it's not that they have engaged with the customer just once and then that customer, you don't know whether that customer will return or not. I got a CD of Microsoft Office. I don't know if I want to upgrade it later or not. But when you move into a software as a service, which is where most of the companies are moved into, or moving into, uh, they're enjoying a lot more multiples. And that's what most of the growth is being driven. Microsoft completely changed themselves to a SaaS company from a Steve Ballmer era to Satya Nadella, SaaS and cloud. Many other software companies, SAP, today SAP is not being valued uh, as the one of the top market cap in a software company. It used to be because they never pivoted towards the SaaS. Now they are moving towards SAP, providing SAP as a service. Oracle is working towards it. So that's why we see a lot more growth in SaaS companies as compared to the traditional companies which used to sell licenses. Yeah, Ramesh says Autodesk. Autodesk is moving towards even Adobe. The reason, if you look at an Adobe, is completely changed. And kudos to Adobe's management. Not over 1 year, they already moved into SaaS. Let's look at 5 year. It's because they pivoted from selling Adobe licenses again to become a SaaS company. So any software company nowadays, they all are moving into SaaS mode of delivering the software and not just dependent on one-time licenses. So that's where commonly we call it that trend as SaaS, software as a service. And from there, a lot of terms picked up: PaaS, platform as a service; IaaS, infrastructure as a service. Now, I talked about BaaS, battery as a service, when I talked about Neo, that you don't have to buy the battery. In Tesla, if you're buying a car, you have to buy Tesla's battery. Battery is a huge component in terms of the overall pricing of a car. So Neo came up with saying, you don't have to buy the battery. You use battery as if you're using service. You pay for only for what you have used. So I think 20% or 30% of the people who are now buying Neo are actually opting to use battery as a service. That means if your battery is depleting, you go to a Neo swap battery swap station. They swap the battery for you in under 5 minutes or something like that. So you don't pay the upfront cost, $10,000 or $15,000 for the battery. Similar now, the as a service trend has penetrated lot many industries than just software. White pop-up showing earnings on the top. So this actually, why I did a study which will tell me on earnings what was the change on after that day. So after earnings, it moved 1.42%, 4.87%, 17.72%. No, Steve, I had to add in this study. So good thing on the Think or Swim platform is you can create your own studies. So I added this study. If someone needs that to add it to it, just shoot me an email. And like someone sent me an email last week for getting how to get this one, like IV rank, etc. I shared with. So if you need it, shoot me an email to vivek@optiongig.com. I'll share how to get this out on Thinkorswim. It's nothing secret. I mean, again, that's the beauty of internet. You search for it, you'll find something. Uh, and so yeah, so I found it, then I kind of customize it for my use. All right, let's coming back to commodities. All right, so before we talk about how to invest in commodities, a quick note on why. So JP Morgan has to say a new commodity super cycle has started. The upswing, especially the oil move, is already started, which will be driven by post-pandemic recovery, ultra loose monetary and fiscal policies, weak dollar, stronger inflation, as well as the impact of environmental policies. So this, if you look at, is from a chart perspective, commodity cycle, last 12-year upcycle from 1997 to 2008, 2009. And then it has been a down cycle. And now in 2021, it's starting to pick up again. And JP Morgan is not the only one. I think when I read about it, I'm seeing a lot more firms are getting bullish on commodities as such. So this will be the fifth so-called super cycle in last 100 years. Two main ways to play commodities. So one, that you use the funds that hold physical commodities or contracts, or you basically buy into the stocks of the companies that produce commodities. Again, there are some more bullish notes about commodities from another commodity strategist at Vanek Global. I'll skip that. Even in the move towards green environment, there is ample opportunity for commodities. So generally, commodities were frowned upon because mining is not good for environment. But now if you're moving towards electrification, electric cars require 4 times as much copper as vehicle with internal combustion engines. So if you are saying is that Tesla is good for environment, but yeah, you need to have 4 times as much copper, and copper mining is not good for environment. No. Eventually, I think I'm not saying we shouldn't have electric cars, but all I'm saying is even though the mining is traditionally looked at bad for environment, mining has a way to fix our environment problems, especially the copper mining. Onshore wind farms, 4 times as copper intensive as traditional power plants. So if we have to move towards clean energy, we have to move towards green cars, we need a lot of copper. And so this is coming from a supply side. On the demand side, there has been underinvestment in commodity businesses. Why? You don't want to invest in a company which is bad for environment. Why are you investing in mining businesses? It's not good for environment. So fewer businesses have been putting money into expanding their mining operations rather than they are giving money back to shareholders. Do buyback, do dividends rather than increasing and expanding your mining business, because mining business is being frowned upon. So we are seeing more demand coming up s- and less supply, because you just can't create a mine out of a blue. It needs investment that we haven't been doing it. So companies that a decade ago were focused on getting bigger are not spending money on new projects. So now we look at some of the companies and see, if you want to invest in commodities, what type of commodities and some of the tickers that if you want to play in that commodity, what are some of the tickers that we could look at? And the last one, political and environmental opposition to new mines means the existing mines become way more valuable. Politics and environment concerns have shut down the competition for existing ones. So when President Biden says they will not allow any more oil drilling on federal lands, that means the companies that already have oil drills, they become more valuable. No more competition for them on federal lands. So same thing we are seeing on commodity side. So if you want to look at iron ore as a commodity, there are a couple of companies. One is called Rio Tinto. Again, I think it's an Australian-based big mining company, fairly big company, $134 billion company, almost 5% dividend. Again, they were not investing in increasing the capacity, rather return the money through dividends to shareholder. So which is a decent dividend yield. Another one is BHP Group. I think it's called BHP Billiton. $161 billion, more than 3% dividend yield. Way better than what we get in CD or in Treasury. Copper, Freeport McMoran, FCX. This got a decent dividend yield. Let me just bring that up. If I can, FCX. Yep, look at the growth from last 1 year. It's from $10 all the way to $30. Our dividend yield is not that great, but I think that the capital appreciation has been great in this one. Oh, so the ones which are in blue means I have position in this one. So copper, FCX, I just opened a position this week after I read through this report. I'm like, okay, I need to have um, investments in the commodities. And if you're looking for an ETF, it's CPER. This is a very small ETF. But if you're interested in ETF, I looked at yesterday, I was looking at it. I could find CPER. There may be others. So if anyone knows other things about copper ETF, share with us. It'll be useful for everyone. But this is a very small ETF. But I found FCX as a good player. I see a comment. Say also Tesla invested in Bitcoin, which leads a lot of energy to mine. Yes, again, but I think the Bitcoin is actually using the energy which or going to the energy sources which anyway would not have been exploited otherwise. So the big problem in the energy is not the generation of energy, but a lot of stuff gets wasted, and there's a lot of money in transferring the energy from the source to the point where it needs to get used. Now the good thing depends on what perspective you're looking at, but the thing, and let me not say good or bad, but the thing about Bitcoin is You can set up your Bitcoin farming mine or if Bitcoin infrastructure at any place. And that's the reason why some companies are going all the way to Iceland and Greenland and setting up Bitcoins over there. Number one, it consumes less energy because it's already cold. You don't need to have same amount of refrigeration or air conditioning as you would need to have if you're setting up in Texas. And number two is doesn't matter. You can set it up anywhere in the world. You set it up closest to where the generation of power is. So because nowadays of the need for Bitcoin mining, many companies are exploring those sources of powers in the locations which they would have otherwise not looked at, because the amount of wastage and the amount of money gets spent in transferring the power would have been huge. But now Bitcoin farms can be located very close to the source of power generation. So I would say, it's a little bit good also that now people are exploring other sources of power, which anyway wouldn't have been used. In EV, SaaS, Packer, do people still invest in commodities? Today, not. But then we are looking at future. Today's SPACs are hot. I'm not talking about, I don't want to build up my portfolio just for today. Majority of the portfolio should be forward looking in terms of what might come in future. And what we are trying to look at here in commodities is, you know, is this a time when the commodities may pick up? Now, I don't have a crystal ball. I can predict, neither anyone could. But there are some trends that people are trying to look at and see if those trends will play out. And now, given the inflationary environment and what we are seeing in the economy, well, I do have a little bit conviction that some of these things will play out. We will need a lot more copper. We will need a lot more lithium. We will need a lot more other metals. And then if that's the case, then the companies that are producing those will become more valuable. Gold. Gold, there are many choices. GOLD, NEM, these are the mining companies. Newmont, Barrick Gold. ETF, which generally I play with, is GLD, GDXJ, GDX. Silver. Silver is getting boost from usage in solar panels. Its price is up 50% past year. And for silver, you could look at PAS, SIL, SLV, SILV. These are again passes. I think it's a mining company. SLV is an ETF. Oil energy. You could do individual companies, Exxon, BP, Chevron, or do ETFs. OIH, XLE is energy ETF, XOP is exploration ETF, OIH is, I think, is a services. So when you're looking at oil, you've got a downstream, midstream, upstream. So different ETFs come in different um, area. Or you can look at USO, which is based on a crude oil futures. Uranium. Demand is expected to rise 40% by 2040 as new reactors are being built mainly in Asia. Because China and India, they need new power. Options are you burn coal, you get a coal powered power plants, or if you want a carbon free electricity, you go to hydroelectric, you go to solar, or you go to nuclear. The amount of power that these developing economies, sometimes I feel bad on calling China as a developing economy because it keeps on competing with US in every front. But anyway, they call themselves developing, which US has been trying to fight that at WTO. But if they continue to grow their economy, they need a lot more electricity. Nuclear is a way for them, even though US is not doing it, but China and India will do it. So uranium will expect to rise. So a couple of tickers on the uranium side is CCJ, is Cameco, is a Canada-based uranium producer. It's one of the biggest producers. Other players in uranium are NXE, UUU, and DNN. And so if you are interested in uranium, you may want to keep these stickers on your radar. So URNM, didn't look at that. Let me just look at it. URNM. Oh, this is an ETF. Not sure. Global Uranium Mining ETF. Yep. Uh, we add that URNM as well. Agriculture. So we talked about a lot of metals, oil, silver, gold, copper, iron ore. Now, if you're coming to commodities also in agriculture, food prices are going higher. Bill Gates is the largest farmland owner in US. I don't know, probably in the world also. But so if he's investing or his foundation is investing, we know where the world will move to. So agriculture, you got an ETF called DBA. So if you want to get an exposure through ETF, you got DBA, or you can get an exposure through agriculture farm equipment manufacturers like dairy, or CF, which is a fertilizer manufacturer, or TWI, which is a maker of wheels. Again, these are, I would say, picks and shovels play. If agriculture is gonna go high, they'll need more equipment, they'll need more fertilizer. And then if you want, we can add uh, other companies like Dow Chemicals or Monsanto or Caterpillar and other stuff. But pure play agriculture commodities DBA. But if you are interested and if you trade futures, there are a lot more, you got a soy, you got a wheat, a lot more options if you got a futures player. So that's will be our agricultural play. So I think that these are some of the things now I'm keeping on my radar and trying to build positions around it. Okay, I got something on copper, I got something on gold, I have something on silver, energy. I've always have had. I don't think I've never, my portfolio was devoid of any of these stickers. I always have had. Uranium, I need to build something. Now, which one will I pick up? I'll go through it and see which one I want to pick up. And on agriculture, I want to have a pure play agriculture, or do I want to get, you know, pseudo exposure through CAT, through dairy, through Monsanto, or through Dow Chemicals and things and like that. So that's all about on the commodities front. So thank you. I think it was Ajit who asked me this question and said, I've never invested in commodities, I think, except these and the GLD. But so when I looked at, okay, how do we play this commodities? And is it the good time to play in commodities? Is XLB a good ETF for commodities? Let's check in terms of what's all in XLB. I know XLB is a materials ETF, but what all's oh, not XLK, XLB. Where is XLB? What is his portfolio? Yeah, so they got a Linde, which is Air Gas, Sherwin-Williams, Air Products, again, mostly Air, Newmont, Freeport, McMoran, Dow. Yeah, so they do have many of these companies which are on the commodities. Again, not so we haven't talked about Linde, which is on the gases side, Linde and Air Products. But I think, yeah, this could be another ETF if you want to get an exposure through ETF. Seizing whale for iron. Yeah, whale mining. I'll have to look into whale because they have been in really bad news recently based on the disaster around the mine that happened. Um, so I haven't looked at whale yet, Vijay. Are you selling covered calls or cash secured puts for any of these commodities? So it depends on the ticker wise. So let me quickly say FCX. I sold a cash secured put, basically naked put because I have a margin account, so I don't have to be cash secured. So FCX sell put. GDXJ. If you've been attending this session, you know generally have a position in GDXJ with a combination of put and the call spreads, trying to extract as much premium as I can. GLD, it's a holding in retirement portfolio, and on the option side, I keep selling neutral strategies on GLD. SLV, I hold some stock plus short puts plus some covered call against those long stock. XOM, I have a stock plus option position. OIH, XLE, XOP, I think on XLE and XOP, I have stocks plus option positions as well. Uranium, I have nothing I need to add. And neither agriculture, I have nothing I need to add over there. Are we doing any upcoming IPO SPAC? Not today. What's my thought on work? Work is kind of the stock is almost dead because after they announced the acquisition, Salesforce decided to acquire work. Nothing much is moving on the work side. Now there is already a ceiling been put on the pricing level, unless there is someone else who comes and gives a better offer for work. I'm actually out of work. I sold my stock a while ago because after Salesforce kind of put up a ceiling on the pricing, I knew it won't move and won't go much anywhere. So I'm like, what's the point in investing in here? I took my gains, deployed that cash somewhere else. All right, let's quickly look at some of the earnings on some companies. So Alphabet, better than expected. EPS, better than expected. Revenue. Amazon, same. Apple, same. Facebook, same. Everything better than expected. Microsoft, same thing. Revenue higher, EPS higher. Netflix, revenue higher, EPS slightly lower, but not too much. So fourth quarter earnings for at least these FANG or FMAGA, because now we have also have a Microsoft, was all better than expected. But stocks didn't do much because stock was already priced in to, you know, what that was already priced in all this growth. So even though the the results were better than expected, probably stocks didn't do that great. As if you were thinking that it'll be great, so let's buy the calls. Probably wouldn't have worked out um, that much over here. I think the last time when these all biggies saw their big run was somewhere in September, October. After that, eh, you know, we will look at Microsoft have been all mostly on the sideways after over here. This is what September. Amazon, same thing. So these big players haven't moved much. The September peak has been just range bound. So, but the fact is that actually these companies they are doing way better than what anyone would have expected, and the markets have already priced in just all of these things before the earnings came out. Disney. Disney has 95 million paid subscribers for Disney Plus. It took Netflix what 6 years to reach this um, target, but Disney's got it in 2 years. Revenue better than expected. Twitter. Okay, I've seen some question. Where is COVID, man? They're all beating on metric. Yeah, because these companies are COVID proof anyway. So we haven't talked about the companies that are impacted by COVID. These all are the beneficiaries of COVID. So no wonder that they will beat it. Amazon is priced in for last 6 months. Very true. Amazon hasn't moved much. Do you expect Amazon to break out now or near future? I have no expectations on Amazon. Again, we have to wait to see how their new results come out to be. But the breaking out on a companies which is like more than 1.5 trillion dollars, we can expect it to go up by 20%, 30%. The share price, not the revenue, but the share price. So that's what I think. Now these are a good range bound place, Amazons and Microsofts of the world. Twitter, things change on Twitter. First time in 13 years, Twitter actually went back to where it was where when it had just IPO'd. It was in 2003. So if you bought Twitter after the IPO jump, now those investors have become even. So Twitter beat the revenue, but what was more important for me was this mobile application promotion offering. So I did not know the name of this stuff, but when I earlier talked about my bullish thesis on Twitter was that they're changing, they're bringing a new ad platform, which Twitter have been working on for last 2 to 3 years. And looks like that is what the MAP was. And then they recently released it in 2020 summer. And they got for the first time, they got $1 billion in ad revenue. So now this business through MAP was up 50% over a year. So now I got a name for that tech. Fourth quarter, MDUs, monthly monetizable daily active users grew. The other thing which Twitter brought was Fleets, Spaces, which is a competitor to Clubhouse. And now they got a newsletter like often called Substack. Twitter up due to Trump. Actually, everyone thought Twitter will be down because of Trump, because Trump has got $80 million, not million, 80 million followers. And if you are cutting off 80 million, the leader, which is being followed by 80 million people, that should have had a lot more impact. So first thing that Jack Dorsey came and told in this conference call was Twitter is more than 1%. So without naming the names, we all knew what he's talking about. So, and Twitter had a fantastic results all up. Uber, they lost, but they lost less. So losing less is also positive stuff. But things that stood out for me on Uber is this: delivery gross booking is even higher than the mobility gross booking. So delivery was a side business, is a trial business that they studied on before pandemic hit with Uber Eats. COVID had the tailwinds. No one expected them, but it became so big that now Uber is investing more into delivery. It's now, even though as a user, I still associate Uber with driving car, mobility, but now Uber is moving from just being a mobility company to we'll deliver everything. You tell us, we'll bring it to your place. You want food, we'll bring it. You want groceries, we'll bring it. And now you want wine, we'll bring it. So Uber shopped with Drizzly they bought Drizzly for more than $1 billion. Drizzly is a company which basically deliver alcohol online delivery. So Drizzly has already figured out all the rules and regulations across all the states wherever they deliver. So Uber like, why do we have to go? Let's go and buy Drizzly. So now, along with your food, you can get a champagne to go along with your food as well. Lyft, while Uber has been diversifying and other focusing on rather than taking you from one place to another, will bring you to your home whatever you need. Lyft says that we want to focus on just moving people around. So Lyft beat on revenue, lost less, and they'll also become EBITDA profitable by fourth quarter. Both businesses started as the same as moving people. Uber is diversified. Lyft wants to become focused and do only moving people as of now. What else? Cloudflare. Uh, Cloudflare, from a result perspective, it was great. The stock actually fell down, so I thought it's a good opportunity maybe to pick up some positions in it. So I did. Revenue was better. Adjusted loss was better. It was 2 cents as compared to 6 cents. And I didn't say anything which should be a cause of concern. So share falling down was an opportunity. Zynga, Uber offering flying taxis. I think they sold off their business of flying taxis. They sold off their business of flying taxis as well as autonomous driving business. They got that money, invested that money in the delivery side. So they may offer it through some other company, but they sold off that business very recently. Zynga, I'm a little bullish on Zynga. Zynga used to be a household name when Facebook had started because they were um, these were the games which used to people can play on the Facebook platform. But then slowly now they're moving kind of a diversifying themselves. They did a couple of acquisitions last year, and they also have more money. They just raised $875 million to do little more acquisitions. And with the tailwind behind gaming and all we are seeing happening on all the gaming companies, I think there might be a good future for Zynga. Last one is Simon Property Group. Again, I've been bullish on SPG for now months. Hold stocks, continue to play options. The good thing about SPG, which is the biggest, I won't say biggest, but I think from my perspective, the best mall operator in US is their occupancy was 91%. So the malls are dying and nothing is happening. But Simon Property Group still at 91% occupancy, and their base minimum rent was actually higher as compared to previous year. So it means they just didn't give up for free. They didn't invite tenants, we'll give you 6 months free. They actually got a higher rental as well. This got a strong dividend yield, 5+%. Very strong balance sheet. Um, Strong to the sense that when not JC Penny almost bankrupt, Simon Property Group bought them. Abercrombie Fitch, I think SPG bought them as well. Plus some of these retailers, which were were tenants on this SPG's malls. SPG bought them, and now they are reusing those facilities for a lot of other things. So a lot of tailwind behind SPG. They could rent it out to Amazon for their storage capacity. So bullish on SPG, continue to hold the position in SPG. So your question is Dash a short? I haven't looked at Dash because it was a recent IPO and haven't seen what have they done. So their next quarterly results will be here. I want to wait and see what could happen in this quarterly result. I think for me it is too early to invest without having seen a couple of quarters. Is it a short? I wouldn't say that because it's not one player takes it all. Nirmal, I think there may be a growth for more than one player. So it may not be Uber Eats. It may not be just Dash and Grubhub. There will consolidation, which will happen eventually. I mean, Dash and Postmates. Was it Grubhub who got Postmates or Dash? Or was it Uber? I think Uber got Postmates. So few of them are already consolidating. The smaller players will get eaten up. This is a commodity business. I don't care who brings my food. Whoever brings the cheapest at the lowest price, I'll basically place an order with that. So it's a commodity business. Smaller player will get consumed by the bigger ones. So we have to see. Right now, Dash has got a lot of money from an IPO, so they don't have to worry about it for now. And I think Grubhub was gotten taken over by Just Eat Takeaway, so they got a lot of money from them. Uber all anyway have money from their IPO. So these are three big players. We'll continue to see who wins among them. So I don't think it. I can make a decision right now saying, hey, we should go short on Dash. That would be too premature. SPG converting malls to warehousing. Yeah, SPG has got a lot of optionality. I mean, they got strong balance sheet also, so they don't have to worry about malls as if some of the other real estate REITs have to worry about. Uber thinking of accepting BTC as a payment. I wouldn't be if in a US. I wouldn't want to use BTC for a payment. Outside countries, maybe just because our IRS is the treatment of BTC is very different from currency. So, and lastly, if I paid as a BTC for my drive from here to airport, 5 years down the line, I don't want to think that for a drive from my house to airport, I paid $20,000. So I will have a hard time in paying through BTC. That two pizzas, Papa John's pizzas, are now $400 million. That's a story we commonly does round in the crypto economy is 10,000 bitcoins were spent on two Papa John's pizzas way back when Bitcoin was even fraction of pennies. Now those two pizzas are worth $400 million or $470 million. I don't want to be the one paying $20,000 for my ride to airport. Does EPG same doing like SPG? I don't know what EPG is. Let's look at EPG. Oh, there is nothing EPG. Doesn't show up. Was that a BOGO deal? I have no idea what the deal was. I think if I recall, I don't think it was a BOGO deal. Someone who they ordered two pizzas, and those initial evangelists were trying to increase the adoption of Bitcoin. Maybe this is like way back 2008, 9, 10. I don't know when it is. I wasn't even active on that. But at that time, those initial developers, they were actually giving it for free for others to try Bitcoin. So 10,000 Bitcoins were spent to buy two pizzas. Okay, I don't want to talk a lot more about pizza. I'll feel hungry. So let's jump into our trade review section. Any other questions before we do that? Oh, EGP. Okay. EGP. E-Scoop Properties. I don't know about this. I haven't looked at them. Uh, I haven't studied it. So let me be very frank. I need to look in and see how much cash do they hold on their balance sheet. What's their what kind of mall properties do they hold? SPG. I've heard good things since I think I started position SPG since June, July. I bought it at $75 and then reduced my cost basis to $31. So for my cost basis 31, and now it's out already 100. So it's like 3x for me. EGP I've not looked at. Again, so the REITs will become it will be a stock picker, individual ticker picker game. You'll have to be careful when you're investing in these troubled businesses because many of them will go out of business. Some those who are strong will survive. So be careful if you're picking up any individual tickers. IIPR. Yes, IIPR. And IIPR is the one which is what, I talked about it and I didn't invest in it. I forgot about it. So I kind of, oh gosh, I was bullish on it. It was on my list. for our cannabis industry. I did CBD, I did GWPH. Both of them have worked out good, CGC, GWPH. And IAPR was also on my list, but then I forgot about it to add it. So I'll get back into IAPR. DBA has been steady decline since 2016. Probably could be because the commodities have been in decline. So all I'm looking at was an agricultural based ETF. So DBA came up. So if we are bullish on agricultural commodities, then it will go higher. Yeah, IIPR is a good play, and I think it is still a good play for cannabis. They figured out all the rules and regulation across the states. So especially if I'm a cannabis company and I need the storage space, I don't want to be dealing with all the regulations. I might rent it out from IAPR, and that's their story behind IAPR. And if this whole decriminalization happens at a federal level, great. All right, just jump into the trades review. Quick review for this week for all the subscribers. We closed 17 trades. Again, we're getting closer and closer to Feb expiration. So plan is to close all the profitable trades. And if some of those are not profitable and we can manage it, let's manage it out and either roll it out or do the other management techniques that we talked about in option boot camp. But yeah, 17 trades were closed, 14 were profitable. P&L, it's okay. Close to 2 grand is fine, but nothing like what we have seen in the last week. And I mentioned last week was an anomaly, probably was one of the most profitable week, but that's an anomaly. We had almost 10K or something like that. So so if you want to look at these trades, these are available on the website. Once you log into the website, you can go to the menu and see your trades. You will see all the, I think, maybe month-old trades. Those are subscribers, they get to get the latest trades. But we talk about some of the trades in this meeting also. So let's focus on those ones. So last week, we looked at these trades which are still open. GDXJ, MSFT, Silver, GLD. Now, out of these 5 trades, 2 trades got closed this week. One was a GDXJ, and that's why I like GDXJ. I mean, it has become a boring. There's no excitement in it, but it does make money. And I've been doing GDXJ, I think, since over here. Yeah, June or July. Except one of the expirations where I had to manage it because it went too high. It's been always range bound. So GDXJ probably had, more than 90% win rate. Now it kind of a little boring as well. It doesn't move too much, not too high, too low, but it makes money. So why not? We continue to do it. So GDXJ, I had a February position. I was bullish because commodities, I want to open bullish positions. When I opened it, GDXJ was at 53.69. Gold fell down all the way to GDXJ was at 51.11. But because we had enough of a premium, I was still able to exit the trade with close to $400 profit. It took longer. It made me wait way longer than I'd anticipated. And I mentioned, as I talked during the last Saturday session, I'm closing it. I got a first opportunity for making money. I don't want to get too cute in trying to squeeze the last penny out of it. Made $400, 16% return on capital, closed that. Microsoft, plain old strangle, 265, 215, slightly bullish. Microsoft stock also cooperated a bit. So we opened it on 27th of Jan. On 10th, stock came back in the middle of short strikes. IV was very low, so not more advantage left in the trade. So took the risk off the table, closed the trade. Um, you know, we got some money to spend over this long weekend. So two trades out of these five I had closed. GDXJ was closed, and Microsoft was another one that we closed. So this is done. This is done. We still have SLV, GLD, GLD. So now we still have that SLV, GLD, GLD are still there, and two new trades back into GDXJ. So had closed February expiration. I've been trading this for long and doing almost similar trade with a short put and a call spread. Let's look at that trade. Same shape of the trade. I've been done over and over again. So if it falls down, we'll acquire it at a cost basis of $47. Fine. It will play into my thesis of, hey, I want to get commodities in my portfolio. If it goes higher, this is no risk on the upside because the overall premium is more than this bid spread. So no risk on the upside. But as we have seen, GDXJ have been largely range bound. So why not? Why not rinse and repeat? I mean, it is boring, but if it makes money, why not do it again and again? So back in GDXJ. And the other new trade is G dot. G dot is green dot. I have a I did a strangle on green dot because I hold stock. So it is kind of a covered strangle. Also, the IV actually got elevated. So it means, okay, now the IV is a little higher. I want to get back into this. So G dot, if you look at, I have what 160 stocks. So yeah, I opened slightly bullish. So Green Dot is a financial services company. Um, we generally don't know as a consumers, but this is a company which is behind most of the cards that are being sold, say in a Walmart, etc. Now I think they also tied up with Apple, so they handle all the back end infrastructure of of the cards which are being sold at many of these outlets. Walmart is one of the biggest. Now GDAT also got a banking charter. Now they're also moving into banking as a service. So I'm bullish on the long term. So I have this in my portfolio. Then I use options to reduce the cost basis. I won't mind getting more. So that's why I did a triangle. So this is the new one on G dot. We'll see. If I stays in between, I close it, reduces the cost basis. If not, if I were to buy it, fine. If it goes higher, we are protected with this. If I include the shares, it's going to be good for me. Anyway, so these are the two new ones. We'll see how we perform on these ones. We'll see next week if I'm able to close maybe SLV, GLD, GLD. So let's look at what's happening on these SLVs. So SLV, I hold shares, like I said, plus I have options. This is making some decent amount of money. Probably I'll close this. This is I don't see any reason why to keep holding this one. We'll close it next week. The other one was GLD. GLD, we did two trades because it moved a lot. It's still in the middle of a short strikes. Still lot more premium is left to be decayed. I'll hold this for long. It'll still take some time to come out, so I'm gonna hold GLD. Okay, so year to date, if you are just coming in this meeting and if you're following on any of these stocks, so year to date, our summary is this: total trades that we have reviewed are 17. We have closed 12, but the net proceeds is 2K or 2100 on the trades that we've been talking about here. I think that's it. Now, okay, I actually scheduled the meeting for 2.5 hours because every time it takes me around 2 hours 30 minutes to go through the scheduled content, and now I'll just focus on some of the stocks that are on my radar, etc., etc. So if you want to drop off, feel free. I'm done with the all the content, especially that I wanted to share for now. Now I'll just look at some of the stocks that are on my radar, and if you guys have any questions, we'll address that. Is GDXJ is a jade lizard? It looks like a jade lizard, but jade lizard has got a very specific deltas on which you buy or on which you sell your puts and on which you sell your call spread. Steve, I don't generally look at a very specific deltas. That is why I don't call it a jade lizard, though the shape of this is like a jade lizard. But I think if I'll be doing injustice if I start calling it as jade lizard. I know Liz and Jenny would say, but you're not using that delta. So that's my answer. They preach picking up very specific deltas for your options when you're trying to do a jade lizard. All right, a quick reminder, we're gonna continue to have our next boot camp. So now we will talk about deltas. This is the most important Greek. So if you have been attending it, you want to be serious about trading in options, understanding about our options, and how to use options to manage a portfolio. Please do attend this. This is the first delta I'm gonna talk about, first Greek that I'm gonna talk about, which is delta. And then in next session, I will cover all the other remainings, theta, vega, and gamma. Rho, I'll just introduce it and skip it because rho doesn't play much role in in the duration on which I generally trade options. So delta will have at 6 o'clock, February 16th. Session is already scheduled on Meetup. So if you want, just RSVP to it and get a Zoom link for registering it. Okay, so like I said, we're almost done with today's session. Now I'll look at some stocks which are on my radar, and anything else that you want me to look at, we can go through those. Okay. So last week, someone asked me about Sava. I had no idea what this company is, so I went back and looked at what the heck is SAVA. So whoever asked or is still there, I kind of forgot who asked me about this company. But someone did put in a chat about Sava, and which I didn't know about this company, and I only think I looked at Finviz and said it's a biotech. Okay, some guest asked. Fine. So in any case, so Sava is Sava Sciences. It's a very interesting company in the sense the field in which it operates is amazing. They are working to find a cure for Alzheimer. When we talk about Alzheimer, and I've seen this story being played out over and over again, it's a very tough or very difficult area. And again, I'm not from have no relation with medical community. I am not even qualified to talk about anything related to medicine, but I see this thing being played out. Biogen had been trying to get a cure for Alzheimer, didn't succeed. I think now they're trying to give another try to their trial results. Then in the last 1 century, there are only 4 drugs that have been approved for Alzheimer. So this is what we saw in Biogen. When we thought it's going to be approved by FDA, it went up and boom, it went down because it looks like the data wasn't good enough. So this is a very, I would say, volatile space to invest in. If Cassava Sciences, if their drugs, same old flam, if it works great in their phase 3 trials, they haven't yet started their phase 3 trials. If their drug performs better as compared to the existing solutions, this is going to be a multi-billion-dollar company. I think right now I think it's pretty small. What is Sava? It's 2.28 billion. It's pretty small. Almost zero income. Obviously, this is a biotech. They are still working to create the drug. This is going to be a great stock to own if the thesis plays out. And that if, when we're talking about Alzheimer, is a big, big if. So you want to keep it as a lottery ticket? Fine. But uh, with expectations that 99% of the time that this will not work out. There are many, if this works out, there will be many big companies which will be willing to pay through their noses for buying over this Sava. But it's not the first time we are seeing this. There was another company, I think Axovent, had similar promises, but when their phase three results came out, they were not as effective as the existing solutions. So the stock went high, then in one day it lost 80% of its value. Same thing could happen with Sava. So it's like Bitcoin in 2007, 2016, early 17. Right? It's got an asymmetric return possibility, but it could go down to zero as well. So invest accordingly. Invest based on what you can afford to lose. It's got an asymmetric return opportunity. OCGN and Sava jumped last week. Article in Barron's. Okay, so OCGN, there were I think couple of tailwinds behind OCGN. One is definitely a COVID one, which is what I'm aware of. But I think Oxygen is also in. I forgot what's their field in, but the Oxygen is a distributor or marketeer or whatever you may want to call the basically that company have got rights to sell COVID vaccine of Bharat Biotech, a company based in India who's got a COVID vaccine, which has been approved in India and is being used in India. Now they are applying it for FDA emergency use authorization. If that goes through, Oxygen will get maybe whatever the number 40-50% of all the money that's being generated by selling that vaccine. So that's where there's a lot of hype around Oxygen last week, and I think it also came down. OCU, OCG. Yeah, it went all the way. It was around $2-3, went all the way to 18 in just 2 days. Now it's back to 10. Again, biotech works always work this way. So that's why I won't bet on biotech for my putting food on the table. But yeah, I could bet some money on biotech to buy a Lambo. That's the way I would like to play on biotech industry. Other thing on my radar, Fastly. Fastly fell down. No news around Fastly, but the other competitors of Fastly, companies operating in the same space as Fastly, their results were not that great. Limelight, for example. So in sympathy with other stocks, Fastly also fell down. Again, I am long-term bullish on Fastly. Probably would take this opportunity to add to my position. Says Biden wanted to tighten his stance on China. So I don't know how that is related to Fastly as such. Toku. Probably I'm butchering your name. I'm sorry. Uh, Illumina, the next one is Illumina is in medical genetics space. A lot of company uses Illumina's machines to do genetics sequencing and all that stuff. So it's been a great stock to own for quite some time. I own stocks. Options is not that great in Illumina. The bid ask spread is very wide. So, but I am in options as well. But I'm not, that happy because doing any management on options at Illumina is very, very difficult. It is like you put on a trade and then be very sure that if it falls down, you will acquire it at that price point. The bid ask spread are through the, you can drive a truck, as I want to say in when you talk of Illumina. If you look at it, the bid ask spreads are all over the place. It's like $14 and $18. And over here, I did it's like $10 and $13. It's so difficult to get a good pricing, and management will not be feasible. So, but I do have positions in Illumina. I've been holding it for some time. Took advantage of this increase to sell some put as well as call spread. 12% of Fastly revenues from TikTok, which is Chinese. So that's the old news. 12% is from overall TikTok, but only the 6% of it was being impacted because that will be based on, because TikTok has got US as well as non-US revenue. So overall impact was 6%. And Fastly already bore the brunt way back when this was announced. So I think TikTok story on Fastly has already been played out over here. So it fell down from 136 to 88 on the news around Fastly. So I don't think the current drop, I could be wrong because I've not seen any news on Fastly. It'll be hard for me to understand that this is because of TikTok. So and this was an overreaction anyway, because the impact was only 6%. What happened to SGEN in the news a couple of weeks ago? Not on my radar. What do they do? Are there any Seagen, biotech? At least the stock price, it doesn't show much. I mean, biotech going up. This looks to be what, from 165 to 190, like 15-20%. That's normal when we're talking about biotech. I don't even think that's a big change. But I don't know what this company does. So I have no opinion on what happened to SGen. Okay, what else? Illumina, Microsoft, one of a core holding, continue to sell strangle on it. As I mentioned earlier, I closed one. That again reduces the cost basis by $3, which is, this is what, $230 stock. Okay, 1.5%. Or 1.5% in 20 days, not bad, but it is boring. So it is not the stuff that you can talk about and say, I made 400% on trading these options. But it slowly and steadily, these things work out, selling options. So I will open up a position in Microsoft. Currently, their IV is so down that I'm waiting for IV to pick up a little bit. Salesforce, same thing. I have sold, like I mentioned earlier, I sold off Slack shares because the Slack shares, Salesforce came and put a ceiling on top of Slack shares. They're not doing anything. So I sold off that. I will invest it in CRM. Again, the earnings are expected week after next. So then IV will go high. And then basically I will do a bullish trade on CRM. Goldman Sachs, same thing. What a beautiful chart. We sold a position in Goldman Sachs last week or early this week. Made some decent money, but because of this going high, the IV has gone down. I'm waiting for IV to go higher to do something more in Goldman Sachs. Jumia, been bullish for quite a long time. I think we talked about it in November, somewhere here. And then initiated the position. I'm still holding it. Continue to sell options. As it go higher, I continue to sell, covered call. And in some cases, I have to give away my share. That's okay. Over a longer period of time, I've seen selling options and covered call has worked for me. May not be in last 2 or 3 months. That's okay. I'm in this for quite long. So they got an earnings coming up. If earnings go good, this might go all the way to 80, 90. I think the 12-month target, when we're looking at a November, we looked at some of the other reports. The target for 12 months was $100, but now what, it's already $70 in 3 months. So I'm long on Jumia. Now it is, depending on which day of the week I'm looking at, either Jumia or Mercado Libre are my biggest holding in my portfolio. Last week it was Melee in between. When Jumia was around 68, that became the highest holding in my portfolio. Oh, I see a question. Would you recommend March 19F fastly sell 100 or 105 strike? Depends on how bullish you are on fastly. Right? It, the higher delta means you are more bullish on fastly. Are you okay to? I would not recommend on the going in the money, because that doesn't give you much any room for error. If you are extremely bullish, you are thinking, then go ahead, because this means you're taking close to 48 shares. My sweet spot is generally around 30 delta. So I would do either 90 or 95 if I were in your shoes. That's where, when if I'm bullish on a share, I go and try to pick at 30 delta. In very specific cases where I'm very bullish, in that case I'll go and do at the money. But generally I'll do it around anywhere between 25 to 35 if I don't get exact 30 delta. So that's my sweet spot, because it still give us a room for error. If fastly, if I sell say 95, it means, and I collect say $8 as a premium, my break even is what, $87. So if fastly falls down, it's okay. As long as it doesn't fall down below 87, I'm still fine. Other one is Magnite. Again, Magnite, I had mentioned that this is one of my highest conviction stocks for 2021. And we be building positions when it was like $6. And then I added on to some position when it was around $30. So pretty happy with what is that. I think this is probably too much too soon, but I'm not complaining about it. Again, I have a long stock as well as option positions in it, some covered calls at 55, which is already surpassed. So I'm trying to defend it, become a little more greedy. And again, covered call only on a portion of a long stock, not all. So the rest of the long stock is still doing wonderful. It's got earnings coming up, so could be very volatile. All this growth might have already been priced in, because we also saw there was another one, Pubmatic, which is in a similar ad tech space. This whole ad tech space has become very, 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 I would say, very hot. Now everyone thinks that this stock or any other stock could be next trade desk, right? That's not going to happen. So there are player Pubmatic. There's a player Magnite, which is this one. There's another one which I came to know about a week ago. No, it was the middle of last week, and I just want to share the ticker again. I'm not done my analysis on it, but if you want to, there's another one called Acuity, ACUI. This is a Canadian-based company, so it is not on US exchanges, so it is trades on over the counter, ACUIF. So they are again an ad tech platform, and they all are riding. Nope. Oh, there's okay. I don't have it OTC here, so I'll have to do it. Acuity Ads Holdings. They have no options, but this stock has gone too high in recent time. Again, so this company have recently released a new software called Iridium, and looks like the corporates and the companies their customers are liking that software. So based on that, it has moved from like $5 all the way to $26 in a couple of months. But I'll watch this space and see what equity brands has to do, because there are no options. There will not be any way to hedge it. That's why I'm just waiting to pull a plug on it. But another one to keep on your radar if you are very interested in ad tech space. I think Kunal mentioned on the slide there is another company that had gone IPO, Variant or something like that, which is again ad tech space. It went up, became 70%, and became public through SPAC. So we are already seeing what's happening on SPACs. But these are the ones which are already public. So I wanted to bring that name, Pubmatic, Equity Ads. What else? Neo. How can I forget about Neo? Been in it for quite some time. Earnings results coming up. Got a strangle. So this is one ticker wherein my cost basis is now 77 cents from $10. I had stock purchase price was on an average was $10, which is decent, but using options reduce the cost basis to 77 cents. Waiting for more opportunities to reduce it to zero so that I'll own it free and clear. Then I don't care where Neo goes. Okay. All right. I'll go through some of these. If you have questions, do ask. Otherwise, I'll continue to go. Few more stocks and then we're done. Pinterest. Pinterest, I want to talk about because there was a recent news, and that's why it jumped high, that Microsoft was actually trying to buy Pinterest. And no one has, I think neither Microsoft nor Pinterest had confirmed or denied the news, but that's the reason why it suddenly went all the way, hit a new all-time high of 87.37. So, but overall, I like this company. This is a social media platform where you are going there because you want to shop something. You go to Facebook to do something else, and then the advertisers has to entice you to sell you something. In Pinterest, you go and tell upfront, I am interested in this. That's what else an advertisers would want. So I feel that they got a great future just because the type of product they are, and their story has just begun. And what else? Stitch Fix. Again, their earnings will be coming up. Uh, I've been on Stitch Fix for quite some time. Some sold covered call, which got called away, but continue to sell options. Now I own Stitch Fix free and clear. So, which is good. I don't have to worry about where the stock goes. In fact, I think the market is paying for me. My cost basis is now negative, which is great. When you do reach at that stage, you sleep well without worrying about the stocks. Silver will continue to own silver. We looked at silver positions already. XLB, commodity play, materials. I don't have any position in this, but XLB's IV is higher than the other ETFs. So I am looking to initiate a position in XLB. IWM, I'm itching to short, do a call spread on IWM. It's way too high. But who knows, it can continue to go higher. I'll see if I want to take a call spread position in this or not. To me, it looks to be too high. XLY, again, I have no positions in XLY, but its IV is higher as compared to others. So I'm looking to do some option trades, sell some premium on XLY as well in the coming week. I think that's it. So Ajit says, awesome. Oh, I think it was for Stitch Fix. It took me 2 years. I've been in Stitch Fix for 2 years to get my cost basis down to negative. So it takes time. Selling premium, reducing cost basis takes time. But Neo is the next one that I want to own free and clear. Cool. That brings us to the end of today's session. Any other question? Otherwise, let's call it done. We are already, 4 or 5 minutes? More than 3 hours. I see a question from Steve. When comparing the extrinsic value of some strike call put, do you use that to choose between buy right versus naked puts? I noticed some stocks are better IV on one side. Uh, so Steve, generally I buy right, I do less. I generally do sell put because if I do a buy right, my cash outgo is higher. So from a from the P&L perspective, synthetically both of them are same. But just from capital usage perspective, I prefer doing a short put as compared to buy right. No, won't be. For example, you're saying you same capital as a naked put. I'm not sure. So buy right means I'll buy, say, 9,500 or whatever. It's what 102 shares, and then I'll go ahead and sell a call against it. Oh, you're doing in the money. Okay. Oh no, I have not looked at in the money. Sorry. So if when I'm doing a buy right, generally I'm buying the stock and selling an out of money call. Do you buy bull uh, call spreads? Rarely. I mean, so whenever if I buy a bull, if I buy a call spreads, I have to be very, very sure in my outlook that the stock will go higher, which is generally I am not because I don't have a crystal ball. So if I'm buying a bull call spread, that would be more of my speculative play. In the in those cases, yeah, but that's like less than 1% of my overall trades is, yeah, let's put some money. Except in cases of VIX, I buy bull call spreads for my hedging purposes. Either I'll buy a naked call or I'll buy a call spread, but that's for my hedging. But mostly it will be, um, otherwise it will be speculative. What about call and put synthetic long stock? I've done it a few times. If I have replaced my stocks, in some cases, I have done call and short put to do a synthetic stock position. That's okay. In those cases, I already hold a stock. It means I already have a very firm outlook to continue to hold the stock. Then I'm just replacing the stock with a synthetic position. Yeah, I think I have that in the Neo currently. I think at a strike price of 30, or when the Neo was 30, I wanted to take kind of a equivalent a synthetic position. Instead of buying 100 shares, I basically sold a put and bought a call at 30. So that was my synthetic stock position. Do you have any idea why the last 20 minutes the index was so much up on last Friday? No, I wasn't looking at. I mean, I don't generally look at minute to minute basis. And maybe last 15, 20 minutes, I probably was away from my laptop. I generally try to move out at 15 minutes before the market closing so that I don't make any stupid decisions based on the news that I hear and the fact that the market is about to close. Then I would, you know, start behaving irrationally. So my target is to shut down, move away from laptop by 12:45. If only I'm stuck in some trade, I'm not able to, then I would stay. Otherwise, I'll move away at 12:45. So I didn't notice that the 20 minutes, last 20 minutes, it was so much up. I think I was making lunch. Cool. All right. Monday is holiday. Thank you. That's a public announcement. Thank you, Ramesh. Yes, Monday is holiday. So maybe we'll give some time to do some study and not look at stocks. We can do some more basic study. Cool. You're welcome. Welcome. Have a nice long weekend. And I'll talk to some of you on Tuesday in the boot camp where we'll talk about Delta. Otherwise, let's talk again on next Saturday.